Welcome back to the Traders Expo here in Las Vegas. I'm your host, Mark Leibovit. We're talking to Mark Sebastian from OptionPit.com, talking and commiserating a little bit about the experiences on the floor of the Chicago Board Options Exchange, which we both share. Him more current than me, but it seems like some of the basic rules and principles really don't change.
They don't.
Mark, I know when I was down there, most of the market makers, all of them, they were pretty much selling premium, and interest rates were, we were talking about off camera about this, where the interest rates, I forgot what they were back in the 70s and 80s, but you could generate some nice income if we're just selling out of the money call and put options, and you could really care less where the market was, because 2 out of 3 times you were right. Tell me a little bit about that and any other anecdotal stuff that you've come across.
Yeah, I mean, it's amazing the way things have turned around. So my director of operations was also a floor trader for like 15 years, and she's married to a guy that's still trading in the SPX pit. He was telling me, other than the major market sell-offs, 80% of his day is just buying puts. And so the amount of long gamma that market makers are dealing with now is crazy. But what's happened is, especially with the way the market is just going up and up and up, if you're willing to take a directional opinion with the VIX at 9, you're going to make a lot more money. In my opinion, you're going to make a lot more money buying calls and letting the S&P rally than you ever will selling puts.
Right.
It's been a no-brainer the last year. I mean, the S&P's just gone straight up, and option premiums have been nil. Right now, when you look at kind of the edge of selling versus the edge of buying, nary has there been a time where the two have looked so kind of fairly priced. They've just come and pummeled volatility. The other thing is, look at the SPX. Do you know how many expirations there are going to be on the SPX this month?
No.
19.
How
19.
So?
There's 3. So there's an expiration in the SPX on Mondays, Wednesdays, and Fridays.
Okay.
Then there is the end of the month expiration.
Yeah.
So one on November 30th.
Okay.
Which is a Thursday.
Yes.
And then so you end up with a 4.5 week period that ends up having 19 single expirations.
Completely different than my days.
Expiration Friday, big expiration Friday on November.
Yeah.
There's an AM settle and a PM settle now for November. So there's actually, every month, on that third Friday of the month, the big one we all used to trade, 2 expirations every day on those. It's ridiculous.
How can you keep up with it?
Well, you can't. That's actually made a very major dent in volatility. One of the reasons why the VIX has kind of stayed consistently low, I think, is the ability to time to the day when you want to set up a hedge. I can set up a hedge for this Friday or this Wednesday or whenever I want.
Yes.
And that has really hampered volatility.
Mark, I wanted to make sure our listeners and viewers are able to track you down and find out how they can benefit from your great insights at OptionPit. How do they do that?
So we write a daily blog. We do a video every morning where I kind of talk about what I'm seeing in the marketplace, and then we write a long blog about something we're seeing in an equity or in the indexes or in the VIX every day. Worth your time. Okay. Generally something actionable in there. So go to our blog, OptionPit.com/blog, and read up on options. You'll be a better trader for it.
So we get recommendations as well as education.
Certainly analysis. I know recommendations is a strong word, but analysis of some specific equities or the overall market.
Mark, it's a pleasure meeting you.
This has been great.
Thank you for joining us here at the Traders Expo. Mark Sebastian from OptionPit.com.